Hey everyone, Justin here, and today I'm talking about the stocks billionaires are buying right now, specifically the past quarter, Q3 2020. Since last week, a lot of results and a lot of information about what billionaires are holding and what billionaires are buying and selling have been released, and that is required by law because the law requires big investors to release their trading activity. So, if you have not watched some of my previous videos, then you might not know that I use dataroma.com to find what stocks billionaires are holding and buying and selling. And it's a website that I use because it compiles the information and it compiles all of this data, which is very useful. So I'll show you right now through my screen recording. So this is dataroma.com. And like I said before, because billionaires are required to release their holdings and trading activity through SEC filings, this website is able to compile it pretty easily. So we have a lot of different investors. I'm going to talk about some of the few that I think are very relevant because of their past track records. And I'll start with Warren Buffett because he's the most famous investor, although recently he has not performed so well, but it's still worth looking at what he's doing. So these are his holdings. As you can see, Warren Buffett holds a lot of stocks, and this makes sense because he's a very long-term investor. When he buys stocks, he holds them for years very often, and his investments are supposed to have pretty long-term horizons. So you can see that Apple makes a large percentage of his portfolio. So does Bank of America, Coca-Cola, which he bought a long time ago. And these companies, which make up the majority of his holdings. And then there's a lot of holdings that make up a smaller percentage. And you can look into the details, but this is what he holds. And the past quarter, he did quite a lot. So he bought all of these stocks and he sold all of these stocks. And you can see he reduced his holdings of Apple, which you should look into because Apple is his biggest holdings. And it doesn't necessarily mean that Warren Buffett thinks Apple is bad because a lot of investors, a lot of big investors, they need to free up capital. And they would sell a stock that they have a lot of, especially when it has already gone up, to allocate it to something that has more potential or more opportunity. And it does not necessarily signify that Apple is a bad stock or whatever they're selling just a little bit is a very bad stock. However, if they're selling 100% of something or a large majority of their shares, then it's usually a sign that they want to exit that stock. So that's Warren Buffett. Now let's look at Carl Icahn, who's also very famous, and most of you probably know him. And let's see where he is. Okay, Carl Icahn. His holding company is called Icahn Capital Management, and he also have another company called Icahn Enterprises, which is, I believe, a conglomerate. Anyway, these are his holdings. He holds less stocks than Warren Buffett, but he's a very concentrated investor like Warren Buffett is, and most of his portfolio is of Icahn Enterprises and a lot of big holdings in other companies, but it's pretty concentrated for the most part. And the past quarter, he traded these 6 stocks. He bought 3, he sold 3. He entered into Occidental Petroleum, and he sold all of Caesars Entertainment. And these two you might want to look into because entering a position often says something about the company, and completely exiting a position, like selling all of your shares of a company, also signifies something. However, if you're just trading about a few percentage points of your holdings, like with Icon Enterprises or with Cheniere, it usually signifies just an reallocation of capital. It doesn't necessarily say much, because if you're just buying or selling a small amount of your holdings, then it really just means that you want to reallocate your capital. It doesn't necessarily mean someone has a big new conclusion about that company. But with something bigger, such as with 41.79%, that signifies something, because that is a significant reduction of his holdings. And even adding almost 20%, or more specifically 17.10%, that is something you should look into, because that is pretty significant, although not as significant as 40%. And since the next guy we'll look into is Bill Gates, and since he's the second richest man in the world, I think it's good to look at what he's doing. So Bill Gates trades through his charity foundation called the Bill and Melinda Gates Foundation Trust. And he holds quite a few stocks, not as much as Warren Buffett, but actually a lot of his holdings is within Berkshire Hathaway, which is Warren Buffett's holding company. So if you look at what Warren Buffett is doing, Bill Gates basically believes that Warren Buffett is someone he should follow, which is why half of his portfolio is of Berkshire Hathaway. And he holds a significant percentage of some other companies. So the past quarter, Bill Gates didn't do too much, but he completely exited Arcos Dorados Holdings, and he entered Uber and Boston Properties. And the rest are also pretty significant trades: 28.65%, 18%, 47%. Those are pretty significant percentages, so there's something to look into. The next guy I'll look at is, let's see. Let's do David Tepper. So David Tepper, he is a hedge fund manager. His hedge fund is called Appaloosa Management. And these are his holdings. As you can see from this column, he's done a lot the past quarter. So this should give you quite a few investment ideas. And so the past quarter, David Tepper did a lot of trading. I'm not going to go into every single trade he made because there's so many, but a lot of these are significant. He completely exited 6 different companies. He made pretty significant trades in a lot more. He entered a position into PCGU, PG&E units, and he made pretty significant trades in other companies, including PG&E Corp, which he increased his holdings by 8-fold. So since he did a lot of trading the last quarter, this could give you quite a few investment ideas. And the next guy I'll look at will be Bill Ackman, who's another hedge fund manager. And he's pretty successful. He has a pretty good track record. His fund is called Pershing Square Capital Management, and these are his holdings. He doesn't hold many stocks, which I personally like. I like investors who are more conviction investors and concentrate their investments in a few companies that they have high conviction about. instead of diversifying your investments, which is what most people advise and which is what financial advisors usually say, because it reduces the risk of your investments when you have your investments pretty spread out. But that also means that it'll reduce the potential returns that you can get from your investments, because if your investments are pretty spread out, if a few companies do very well, you're not going to get a lot of money from that, because you're not significantly invested in those companies because your holdings are pretty spread out. And the upside is you won't lose a lot of money, because if a few companies do very badly, since your holdings are so spread out, they're not going to drag down your returns by that much. So it's not going to help you by a lot, but it's also going to allow you to avoid big losses, which is why financial advisors usually say diversify your holdings. But if you're a very good investor and you do a lot of research and you research very in depth into what you're investing in, then it really makes sense to concentrate your holdings, because then it shows that you have high conviction of what you're doing. You're putting your money where your mouth is. You really believe in the companies you hold and the trades you make. And I think that is something that's very helpful for people looking into investment ideas. And I also think that is the way to go if you really want the big profits. So the past quarter, Bill Ackman didn't do much. He just sold small percentages of his holdings into Lowe's, Agilent Technologies, and Hilton. And with these small changes in a investor's holdings, I advise you not to think too much about it or conclude too much about it, because, again, reallocation of capital, and also with these hedge fund managers, a lot of them have to return money to their investors. They have people giving them money and investing for them. And in order to give them the money back when they want to, they have to sell some of their holdings. So I wouldn't conclude too much about what he's doing the past quarter. Basically, he's not doing much. I think that is the right conclusion. Which doesn't mean he's lazy, because if he has his holdings and he's comfortable about it, then there's no reason to trade his holdings away or enter into positions he doesn't want to. It's better to keep your holdings if you think they're fine and they're going where you want them to go. And lastly, I would like to look at Seth Klarman, who's another hedge fund manager with a good track record. He runs Baupost Group. These are his holdings. He holds quite a few companies. You can take a look. And you can also go to dataroma.com and look for yourself, and also find maybe other investors you want to follow, because they can give you investment ideas. Now let's look at his trading activity. So the past quarter, Seth Klarman bought quite a few stocks, and he also sold quite a few stocks. He completely exited his positions in 5 different companies, and he entered new positions into quite a lot of companies as well. And he also significantly increased his holdings in these 4 companies. And I think PG&E Corp was also traded by one of the people we looked at before. So that could be something you can look into. But anyway, this is his trading activity, and that should give you more trading ideas. So again, I think looking at what top investors are doing and looking at people with good track records, what they're trading, is pretty helpful in giving you investment ideas, because especially if you don't work in finance or investment full time, you don't have the time to really research in depth about different companies. So with these hedge fund managers, these top investors, they are pretty much doing the work for you, because they are buying stocks for their investors and for themselves. They are selling stocks as well, and they're required to release what they're buying and selling to the public because of SEC regulations. And that means you can see what they're doing. They have people doing a lot of research, and they have themselves doing a lot of research, and this is the results of their research. Their holdings, their trading activity are the results of the research, and they are basically doing the work for you if you look at what they're doing, what they're holding, and what they're trading. So you basically have your own research team that you don't have to pay for by looking at these top investors. And not only are they doing the research, they're also putting their money where their mouth is, because they're putting their money into the stocks they want and they believe in, and they're taking their money out of stocks they think are not worth holding anymore. And that should give people ideas and suggestions on what to buy and what to sell. And again, these people have good track records, so looking at what they're doing is pretty helpful. So thank you for watching. I hope you enjoyed the video, and I hope this video gave you investment ideas to look at. I think that a lot of people have said that these reports, this information is released a quarter at the end of the quarter when they have already traded, which is true. But with most of these people I showed you, and with most really successful investors, especially value investors, their investments are long-term. They don't day trade. They don't buy a stock one day and sell it the next day. They don't do that. And I think that is a misconception a lot of people have who have commented on my previous videos and my TikTok videos, who say that, oh, these people only release the data at the end of the quarter. Yes, that is true. But they don't trade their stocks every single day. They don't day trade. They don't buy a stock and then sell it the next day. Their investments are long-term. Their investment horizons are years. They buy a stock, they often hold it for years before they sell them. So it doesn't really matter much that they release it at the end of the quarter, because most of the time they want to buy the stock and hold it for years. They are long-term investors. Knowing this information at the end of the quarter doesn't really matter much if really the stocks will be held by them for years. And you're looking for investments that can last for a few years and give you returns over a few years rather than over a few days, because I'm not a big proponent of day trading. So that is why I don't think it really matters that they release it at the end of the quarter, and I think it's fine. So again, thank you for watching, and I hope this inspired you with investment ideas, and I hope this helped with your investment research. Like, comment, and subscribe if you like the content I produce. Also, follow me on TikTok, where I make shorter videos about the same topics I talk about on YouTube. I also write on medium.com about the same topics I talk about on YouTube. And if you want to contact me, feel free to DM me on Instagram. I'll see you guys next time.